Welcome to a bit of a real estate horror show. What does all that mean? Today we're going to dive into that and see what's going on here in South Orange County. First of all, let's talk about number of homes for sale. That's inventory. So back in 2019, we had 1,850 some homes for sale, and that number dropped and dropped and dropped until 2021, where we hit all-time lows. Came up last year, and then we're back down again this year. So that is part of what's going on, a big part of what's going on in our real estate market. We'll get into why here in a minute. So you can see the general trend is down 62% from 2019 and down 37% from last year, just to give you some trends of what we're seeing. So this is kind of the monthly trends back in 2019. This is a somewhat normal trend where you start low in January, go up through about August, and start coming down after that summer peak. And 2022, you can see, was a lot lower numbers. Those were January's a record low, 250 homes for sale in all 12 South Orange County cities. It was ridiculous. You had 3 homes for sale in Ladera Ranch, for example. But the trend throughout the year was fairly normal, again peaking in August and tapering off towards the end of the year, which brought us into this year. So in January, we started out with more homes for sale than the previous year, but then that number just never really went up more than 30, 40 homes. So what you're seeing is just a very flat, low, kind of almost bottom of the barrel amount of homes for sale. So one of the biggest causes of that is the number of new listings coming on the market. Back in 2019, homes coming on the market peaks a little bit earlier, usually April, May timeframe, which is what we had in 2019. 2022, we peaked a little bit earlier because interest rates started to spike in the middle of the year. And so that put a damper on the new homes coming on the market. And then this year, we've been way below last year and any other year. And then finally here in November, the number of homes that came on the market was just about the same as last year, where those red and green lines are interacting. So number of homes coming on the market has really put a damper on sales and led to that horror show of lack of real estate activity. So this is just a recap of the number of homes that have come on year to date. So January through November 2019, you had over 16,000, and we're down 56% from that, 29% from 2022. So if you had to guess, if the number of homes coming on the market is down 29% compared to last year, what do you think units have done? Hold that thought. Here's another reason. Interest rates. Now, if you look at the right side of the graph, you'll see some hope. We peaked at 8% in October and dropped pretty quickly, half a point in a matter of days after the Fed said, we're not going to raise rates, we're not going to lower rates. And then throughout the rest of the month of November, rates trickled down to 7%. That's kind of the quoted retail rate. For a 30-year fixed, your rate can vary, higher or lower, depending on a lot of factors. First thing we'll look at is escrows. Demand usually peaks around, April, May timeframe, tapers off towards the end of the year, starts out slow, as you see in January 2022, peaked a little bit earlier, peaked in April. The interest rates scared buyers off. And then this year, again, a flatter curve, not tapering off as much, constricted by the number of homes for sale. And actually, the last couple of months, there's been more demand in 2023 than 2022. Those interest rates coming down a little bit helped, and buyer demand has remained relatively high compared to the number of homes for sale, and thus has not tapered off as much as we had expected earlier in the year. So now we're going to look at what's called months of supply. So as you recall, if you had 100 homes for sale and you're selling 10 a month, that's a 10-month supply. But if you have 100 homes for sale and you're selling 50 a month, that's a 2-month supply. Same number of homes, completely different markets. So in 2022, you can see the months of supply pretty much rose throughout the year. We had a little bit of pause in September, but it went from half a month supply to 2.5 months supply, which is a pretty big increase. So starting in beginning of 2023, the red line, we actually dropped as demand increased, and then it's kind of settled out at about 1.5 months supply. Ticked up a little bit here in November, which is somewhat normal, but still a relatively low amount, less than 2 months supply, which is still kind of a seller's market traditionally. So not the buyer's market that buyers were looking for, but still kind of not a fun market. Okay, now we're going to look at closed sales. So this is what is actually recorded with the county. And in 2019, you can see we peaked in May, holds pretty level through the summer and then tapers off towards the end of the year. That's a kind of a normal curve. 2022, because interest rates kicked in and went way high in the middle of the year, the peak was in April, and then we dropped off pretty sharply. And then in 2023, you can see we started off at a low number, peaked in May, held fairly level through the summer, and didn't drop off quite as much. In fact, as of today, we have more homes in escrow than we did last year. So a little bit strengthening of the buyer demand, especially compared to that last year. So if we look at cumulative year-to-date sales, 2019 at 9,600, we're down a third from there. 2020, we're down a little over a third from those 10,200. 2021, we're down 47% from the 12,000 that were sold year-to-date in 2021, real high COVID demand. 2022, we're down 21% from there, and that puts us at about 6,500 homes year-to-date that have closed escrow, so like almost half of 2021, so quite a drop. So what has this done to pricing? Well, here's Orange County average dollar per square foot. You can see we're relatively flat. 18, 19, 20, COVID came in, demand went through the roof, and prices spiked. And then when interest rates kicked in, you can see that drop in 2022. That's where prices went down on average, dollar per square foot basis, 12%. And since then, we've gone back up about 16%. And actually, as you can see, we've gone above the peak, right about 2% above the peak from 2022, and recovered in most areas the drop that we saw in pricing. So the $64,000 question is, what are all those market dynamics done to pricing? Well, this graph looks at a couple specific cities. Every city is a little different, but you can see they generally go up and down together. Mission Viejo, year over year. So this year compared to last year is up right about 12%. Ladera is up about 15%. Laguna Niguel is about 13%. How does that compare to their peaks? Well, Laguna Niguel is at their peak. They've surpassed the peak from 2022. Mission Viejo is still about 3% below that, and Ladera Ranch is at their peak. So in conclusion, the lack of inventory, the few homes on the market has not only frustrated buyers, but it's dampened the market. That's why the sales units are down, from almost 50% compared to a couple of years ago, 21% compared to last year. And by having that low supply, even though demand is down, supply is down just as much. That's kept pressure on prices to not only stabilize, but recover and go back to in a lot of cases the peak or very close to the peak. So what does that mean going forward? Although the crystal ball has long since been shattered, if inventory stays low and interest rates don't spike back up, we're going to see a similar market of slow sales, meaning not a lot of them, demand very close to just gobbling up anything that comes on the market unless it's way overpriced. An opportunity for sellers to create demand for their home because of lack of competition, and buyers are going to have to continue to compete against other buyers. Now, if interest rates drop, the buyer demand will actually increase, so it's not necessarily going to get better for buyers. And that being said, we're also going to see more sellers coming on the market. Talked to a seller yesterday and he's like, hey, I've got 2.75%. I don't want to move and take a 6.5 or 7% interest rate for the new house. So unless circumstances change, you need a bigger home, smaller payment. It's going to be tough to find homes for sale. And so helping you navigate this market, whether you're a seller or a buyer, that's what we're here for. We've been blessed to be successful in helping both our sellers and buyers in this market. So when you have thoughts of real estate, buying, selling, investing, give us a call. We can help you navigate the market, tell you what's going on specifically for your neighborhood or your target neighborhood, and so that you can make the right move. I'm Jim with the Bishop team, your leading realtors here in Orange County, California. Have a great holiday season.